Hello and welcome to the Weekend Investing Daily Bite of November 5th. And we had a good bounce in the market today. The first half of the day was somber and markets were coming off. And then, market men decided that they should corner the bears for once. And the bulls came ramping up. Short covering ensued from the bear camp. Also, because tomorrow is the outcome of the US elections, and likely that people who have big positions don't want short positions to carry for tomorrow morning. That may have been a reason for the bounce in the markets. It's a relief bounce. We don't yet know whether this is the last bottom of this leg or not. But it did seem like since yesterday that market is not willing to go down any further immediately. So there it may chop around for some more time or have a bounce, and then let's see where it goes. So we have done a data study on the strongest stocks and sectors in the last 12 months. We will go through that in today's video. More because we tend to lose the context when we look at short-term markets. So everybody's, mind is very bearish or sulky right now. But you need to have context where we are coming from in even just 12 months. Forget about 24 and 48 months. So we'll take a look at that and sort of set our mind frame regarding the markets. Please do read the disclaimer and subscribe to the channel if you haven't so far. So nice bounce here. You can see almost after clipping this pivot low yesterday, it had retraced back, and today also we went almost to yesterday's low and smartly recovered back. Nifty up 0.91% for the day. Can't really say that the worst is over, but it's a great relief from this point where we were in middle of the afternoon, which was pointing more towards going towards 23 300 400, which is the HNS target of the first HNS. So this is a strong move today. As I've been mentioning many times earlier, one should be looking out for at least a 2-day high to be broken on a closing basis. So next session is very important. Let's see what US results have in store for us. Nifty next 50, a bounce of 0.55%, but not very impressive. We are still in this range of consolidation that we had. So it's just about managing to hang in there. Nifty mid cap also the last 8 or 9 sessions has been within this 300-point range, 2862.46% here, and small caps gained 0.48%. Amongst all indices, small caps are still looking the better of them all, not being near these July low pivots. This time also we've not come close to this, and the current move is also not close to this, which on the Nifty is. So if you see it relatively, Nifty chart looks much more weaker than the small cap chart. Bank Nifty also smart move, a complete bullish engulfing and 2-day high broken and closed on Bank Nifty 1.94% type of move. So I think Bank Nifty bulls are either betting on the fact that you know s- a a a move towards maybe uh, continuation of the current US regime happens, and in which case maybe we will go towards interest rate cuts. But I don't know. I mean, this is could be a knee-jerk short covering bout also. But nevertheless, Bank Nifty is making very strong moves whenever it does. So that kind of indicates that weakness is not there really in Bank Nifty. Bank Nifty is completely, you can say, consolidated, and a sharp move up is definitely possible on Bank Nifty from here, 1.9% on Bank Nifty. In terms of momentum, advanced declines, you had 300 advances to 178 declines, 317 advances. So nice bias towards the advances. And FIIs continue to be on a selling spree, 4,000 crores again sold. DIIs about 3,000 crores of buying on 4th of November. In today's heat map, you had significant number of green. So steel, cement, banking, these were the ones which were buzzing along with some autos. You can see HDFC Bank, remarkable 2.5%, along with SBI at 2.3%. So both private and PSU banks leading from the front. Bajaj Auto up 3.6%, Tata Motors 3.6%, JSW Steel 4.6%, Tata Steel, sorry, 3.6% here. Tata Motors was 1.4%. So a good and the government sort of giving a hint of upping the import duty on steel. So Indian steel manufacturers were rejoicing. I think in case Trump comes in tomorrow, we will see a lot of tariff barriers, and US may up its tariff barriers on China. We may up tariff barriers versus China. China may want the yuan to devalue. We may have to follow with USD INR going the same way. So there's a lot of dynamics that may happen depending upon who comes in. Coal India, Infosys, Bharti, and ITC remained on the red. Nifty Next 50, again a mixed bag. You had some good gains from PFC, Chola Finance, Adani Power, Adani and Sol, TVS Motors, Vedanta, and Jindal Steel and Power. These were doing well. Lodha, ABB, NHPC, TV's Lab, Pidilite, PBL, Bajaj Holding. These were the ones losing some ground. Sectoral trends, you had metals leading the markets. Just on that news that I just mentioned, 2.8% for the day, 1.8% for the week. So good recovery for the week from metals. Private banks led by HDFC Bank up 1.9%. Again, the weekly loss is gone. PSU banks also 1.8%, 1.9% up for the week. Autos up 1.1%, again 1.1% up for the week, and the rest were a little less. FMCG was still reeling, so FMCG down for the day, down for the week, down for the month, and down even in 3 months' time. So energy, public sector enterprise stocks, and FMCG are the largest sort of losers in the 3 months gone by. Although for the 12 months gone by, FMCG also is one of the largest, uh, lowest gainers at least in terms of 12-month performance. All these steel stocks were running 3 to 5% approximately. Metals sort of in this range, but now it looks like the range has bottomed. Gland Pharma made a huge move from 1600 levels to 1832, up 13.78% post its numbers, and it has had a very volatile history. From 4,000 it dropped down to nearly 900, and from 900 it went to nearly 2,200 in the last year and a half or two. Is consolidating here and potentially is now going to target this high going forward. So strongest stocks and sectors in the last 12 months. So let's see what has done well. So we mixed the sectors and benchmarks in this table. So public sector enterprise stocks have done the best in the last 1 year, 65% gain. Then you have reality stocks doing 51%, pharma doing 50%, Nifty Auto doing 46%. As a group, Nifty Next 50 from a benchmark point of view did the best at 53%. Then you had metals gaining 44%, small cap as a index doing 43%. Then oil and gas, Nifty Energy and infrastructure were around 40 to 42%. Then you had mid caps at around 39% or then commodities, consumption stocks, PSU banks and MNCs 32 to 38%. Then you had Nifty IT at 30%, services sector at 27%, Nifty at 24%, financial services at 21%, Nifty bank much lower than Nifty at 17.9%. And then you had FMCG doing 12.5, private banking doing only 11.1, and media actually being in the negative minus 13.1. So this is where we are coming from in terms of last 1 year performance. And you know very well, uh, this kind of performance is not repeatable every year or even every other year. So having gained 30 to 50% kind of moves in 1 year, it automatically means that it is going to be and especially it is coming off on a base which was not an underperforming base. So the 3 years prior to this last 1 year were not underperforming, and on top of that we have performed this well. So there is some reversion to the mean that is likely to happen, or some at least some time correction where earnings may catch up and valuations may come closer to where they want to be. But just to give you an idea that if we are expecting 15-20% kind of gains in a year and you get 40, 50, 60% kind of gains. Obviously, we've jumped a few years in 1 year. That is the whole thing, that you were supposed to jump from A to B, but you jumped from A to D in the first jump itself. Then obviously the time period for the next two jumps is going to be moderated. So if you see it from that point of view, uh, sometimes the markets will discount far ahead, and um, there will be other markets which have not done so well. Like for instance, China has not done so well. So any investor who has no love and affection for India as such, and who has invested in India, sees his portfolio go up 50, 60% in 1 year. He says, I'll take off something from here and put into China, which is what we do with stocks also, right? So it is a natural progression for a market which has jumped a lot, which had a lot of liquidity flows, to see some liquidity outflow, so that there is balance towards other markets also. So the correction that we have seen so far is just very, very moderate, I would say. I mean, it is not even a correction, a proper correction. It is just a tempering of liquidity flows right now. And really, as of now, at least, there is no need for any worry. In terms of more details of what has happened in the last year, maybe since last Diwali, is some of the stocks have really done well. So even within the Nifty 50, you have had stocks like Trent, 214% up, Bharat Electronics 100% up, Mahindra almost 95% up, Bajaj Auto, NTPC 81 and 70% up. And there have been stocks which have not performed at all. HUL is at virtually at zero for the whole year. Maruti is at 9%, Tata Consumer is at 9%, ITC 11%, Bajaj Finserv at 11. These are the bottom five of the Nifty, and these are the top five for the Nifty. In terms of Nifty Junior, the next 50 stocks, you had Hindustan Aeronautics up 118%, IRFC, Zomato, Siemens, and Motherson Sumi. Those who are running several of our strategies would notice that all of these stocks were there in your portfolios. Some of the stocks that didn't do well, uh, as compared to the top stocks. So the bottom five also were not so bad. IRCTC gained 23%, LTI 12%, Union at 10%, Chola and Avenue Mart. You would also notice that none of our strategies were having the bottom five stocks in there. So there's an automatic selection of the stronger stocks that happens and goes along. Within mid caps, again, familiar stocks, Kochi Shipyard up 200%, ABB Power 214%, RVNL 188, Hudco, OFSS 175. All of these were present in your portfolios. Bottom five stocks, UPL, AIA Engineering, L&T, Tatacom, and IGL, just about nearing. So the good part about this year has been that even the bottom stocks are not really negative as such. They are all flat or slightly positive. Within the small cap space, again, you are seeing Inox Wind, Motilal, BASF, Netweb, Techno, all these have gained 200 to 300%, and the worst performers are these five, which are basically flat. Uh, so gains have come in all segments. Of course, the gains are concentrated in certain pockets of those segments, and the idea should be to focus on those pockets and ride those trends. Now, a lot of folks are watching the index or watching the different indices, and are feeling gloomy. So we need to understand that the last 1 year has nothing but being terrific. So that context is important. Markets will not grow to the skies. We will go up, come off a little, then go up, come off a little, consolidate, maybe do nothing for 2 years, then go up. So there will be a lot of phases of digesting the gains, removing excesses, removing over ownership, becoming under owned again. All that is a constant, continuous process of churning, and in our scriptures, like we say, manthan. Manthan is happening, where all these excesses and the demons will be phased out. So you have to cross that phase by being patient. Bear markets can also have some very strong performing stocks, so you don't want to be away from the markets also. And the framework should be able to select the stronger stocks versus getting out of the weaker stocks at any point of time. So let us know if in the comments if you've had several of these winners that I pointed out in your portfolios, and if not, Did, the price earning on them or them running away very rapidly made you, scared of buying those winners? Did you have a way of identifying them and then, getting onto them and then having a plan to exit? Do mention your experience here. But overall, I would say, given that we've had some fantastic years and the last one great year, don't be disappointed with the markets if they come off a bit. This is all part and parcel of the game. Thanks. Bye.